The income statement. An income statement provides a summary of income and expenses for a specific period of time. In this video, we'll look at a sample income statement and calculate certain values within the statement. The income statement shown below provides a summary of income and expenses for Melinda's Candy Shop from January 1st to December 31st. Use the income statement to answer questions 1 through 4. So here we have a sample income statement. Notice that several values are given to us. These values are values that the business already knows. So we would already know the gross sales, the returns, inventory, and then our expenses. We're going to use these values to compute the net sales, cost of goods sold, gross profit, and net income. First, we're asked to find the net sales. And net sales is given by the formula gross sales minus returns. So we're simply going to go to our sample income statement and identify the gross sales. Gross sales is $197,670. So we'll put that value into our formula, and then we're going to subtract the amount of returns from it. So returns is $18,800. When we subtract these two values, we get a value of $178,870. So this is our value of net sales. And we would place this into the income statement on this line. Next, we're asked to find the cost of goods sold. The cost of goods sold is found by taking the total of goods available for sale and subtracting the inventory. Now we're going to subtract the inventory on the last day of the period that we're looking at. So since we're looking at January 1st to December 31st, we're going to take the amount of inventory on December 31st. So that means that our formula becomes $187,820 minus $75,600. So when we subtract those two values, we'll get a final value of $112,220. And that is the cost of goods sold. And if we're completing our income statement, we would put that in this cell. Now we'll find the gross profit. And the gross profit is found by taking the net sales, and we previously found the amount for net sales to be $178,870. So we'll take that value and then we'll subtract the cost of goods sold. And the cost of goods sold was also found previously, and that value is $112,220. So we'll just plug these values in, and then we're going to subtract them. When we subtract these two values, we get $66,650. So this is our gross profit. And we would type the gross profit into this cell here. So as you can see on our income statement, this column tells us easily where the net sales would go and then where the cost of goods sold would go, and we would just subtract those two values to find the value in this cell. Lastly, we want to know the amount of net income. And net income is also referred to as net income after taxes. So, to find the net income after taxes, all we do is take the value of the net income before taxes and subtract the amount of income taxes, and we'll find the net income. So to do that, we'll just take $48,070, which was the net income before taxes, and subtract $9,750. When we do that calculation, we'll get an answer of $38,320. So this is our net income. And this is usually the last line of the income statement. Mike's hardware store had a cost of goods sold of $54,080, operating expenses of $18,030, gross sales of $94,860, and no returns. What is the net income before taxes? For this problem, we need to utilize three formulas. And that's because if we look at our last formula, this formula tells us how to find the net income before taxes, and that's what we're asked to find in this problem. But if you'll notice, we need to know the gross profit in order to use this formula. So that's why we're going to use these first two formulas in order to find the gross profit. Then we'll take the gross profit and plug it into the last formula to find our final answer. First, I'm going to find net sales, and net sales is found by taking the gross sales and subtracting any returns. So gross sales is $94,860, and the problem tells us that we don't have any returns. So we're going to subtract 0. So 94,860 minus 0 is just 94,860, and this is the value of net sales. Now we're going to take net sales and plug it into our value for gross profit. So gross profit equals $94,860 minus the cost of goods sold. And the cost of goods sold is $54,080. When we subtract those two values, we'll get $40,780. So this is our gross profit. That means we're going to take the value for gross profit and plug it into the formula to find the net income before taxes. So we end up having $40,780 minus operating expenses. And the problem tells us that operating expenses is $18,030. $40,780 minus $18,030 gives us a final answer of $22,750. So that is our value for the net income before taxes. And that's our final answer.